Morning, good morning. Welcome to today's morning blast with myself and the exquisite Mr. Michael Brown. It's Wednesday, the 5th of March. Before we go any further, let me get the legals out the way. So, as usual, nothing discussed in this space is session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Mr. Michael Brown, how are you?
Very good morning, Ryan. Good morning, everybody. Happy, fuck me, it's only Wednesday, isn't it? Happy Wednesday, everyone.
Oh, it's only fucking Wednesday.
It's been a very long week so far, hasn't
Oh, mate, what a year this week has been.
it? Honestly. The sun's out, though, at least. We can't complain.
Exactly. And 2 more days until non-farm pints. Just counting it
Indeed.
down.
Indeed. It's
So,
like Christmas Eve, isn't it?
almost 2 more sleeps. Like, considering you've got about 4 hours worth of news to cram into a half hour, I think we better kick on.
Well, yeah, I'm glad you said half an hour as well, because this show used to be 15 minutes, but there's absolutely no way we would make that this morning. Good morning, everybody. The headlines this morning read: stocks down under Trump. The S&P 500 closing down by 1.2% yesterday, with the main US benchmark equity index having now wiped out its gains since election day on the 5th of November. Indeed, I would say that this is pretty important from a psychological perspective, and you could easily argue that this is effectively the first strike price for what we would call the Trump put, if one does indeed exist. I can't imagine, well, certainly 4 years ago, a whole load of headlines of market in the red under Trump presidency would not have gone down particularly well in the Oval Office. This time around, though, the administration don't appear to be in any mood to pivot on their policies whatsoever, and in fact actually appear more likely to double down as opposed to rolling things back. Although that said, we did have some marginally positive news on the tariff front yesterday. Of course, with those 25% levies having gone into place on both Canada and Mexico at midnight on Tuesday morning, we heard yesterday from the Commerce Secretary, Howard Lutnick, saying that it is possible that those tariffs will be rolled back tomorrow, i.e. today. Now, Lutnick was speaking in riddles, to be completely honest with you, when he spoke on Fox News. But I think the nub of his argument was he'd been speaking to his counterparts on both sides of the border, and effectively the most likely scenario is that the administration outline potentially a roadmap as to what Mexico and Canada need to do in order to move, in order for some of these tariff measures to be rolled back. Lutnick was quite clear in saying that Trump is not going to suddenly come out and cancel the measures entirely. It will be a sort of phased approach. But as always with this sort of thing, the caveat must be we don't know how Trump is feeling this morning. The wind could well be blowing in a completely different direction, and that may not take place. But nonetheless, that is something worth keeping on the radar throughout today's session. I thought it was interesting, actually, yesterday, just sticking on the tariff front momentarily, that Mexico, we heard from the Mexican leader Scheinbaum yesterday, and she said that Mexico will not announce countermeasures until Sunday. Now, this is in contrast to what Canada have done, where basically every political leader in Canada has started to throw their own retaliatory measures on the table, including the Premier of British Columbia saying we can import beer from Democrat states but not Republican ones, which is quite frankly farcical. But the Mexicans seem to be taking a little bit more of a slow and steady approach, which I do just wonder whether that potentially opens the door, or at least leaves the door a little bit ajar for there to possibly be some sort of conciliatory measures there.
We did
Go on.
mention yesterday that the Mexicans are kind of playing this, if there is a right way, the right way. Basically, they're being very proactive. They're not kind of, they're not poking the angry baby when he's upset. And, I think if I think exactly what we said yesterday, if there is one nation that's going to come out of this probably a little bit better, It's a big if, but it may be the Mexicans. Just one thing quickly, because you were talking about like the Trump put per se. Alf Pix did put out. I'll give him credit, fairly good meme, although I'm not too keen on 10-year bond. I think I'm still going to refer to it as a 10-year note.
Oh
But
dear, no, they need to wash their mouth out for that.
yeah, I know exactly. It's atrocious play, to be honest. But they did make a fairly good meme, which is last year, or sorry, the last term, Trump was all about stock price. Now he seems to be all about the 10-year yield. And that's true. Like everything he's saying is about yields and rates and stuff like that, and he hasn't really mentioned stocks at all under his leadership so far. And I don't think that's going to change whilst it's in the red, to be honest.
No, nor do I. I was actually halfway through writing a note on that sort of thing before I had to come and speak to you. So I'll put that out later on.
So yeah, I see what you've done there. So you're not going to write one.
Well, I do have a real job, I don't just sit here and mess around with you all day. In any case, what else is going on? Sticking with Trump, because there's a hell of a lot on that front, and then we'll get on to what's going on elsewhere. Of course, Trump did give this address to a joint session of Congress yesterday. A few notable headlines from that. It was a 90-minute speech, which is apparently the longest one of these that has ever been given. Trump was talking about the CHIPS Act. You'll recall I mentioned earlier in the week that around 40% of the staff who are meant to be running the disbursements under the CHIPS Act have been sacked. Well, Trump has now gone one step further and wants Congress to repeal the CHIPS Act and says that they're not going to give any money to chip makers whatsoever. That is something worth noting for firms such as Intel, who have basically been relying on the government to prop them up for quite some time. You'd expect Intel to trade a little bit softer at the pre-market open in about 25 minutes time. Trump was also repeating his rhetoric around oil, saying that they want to produce more in the United States, and also urging Congress to deliver further tax cuts, probably an extension of those which he originally introduced back in 2017. And on the geopolitical front, Trump rather performatively read out a letter that he received from Ukraine President Zelensky. This was a bit of a grovelling apology, to be completely honest. Zelensky basically saying, we are indeed ready to sign the minerals deal, and yes, we are very grateful for the help that you have given us. So it looks like that is potentially back on track. Trump was also saying that he has had strong signals from Russia that they are ready for peace. And actually, on that note, there was a kind of jaw-dropping story from Bloomberg yesterday that apparently Trump has asked Putin to be an impartial broker in talks around the Iranian nuclear deal. Bloomberg sources report that it is apparently unclear how receptive Tehran will be to any US overtures that are delivered via Moscow, but nonetheless, that's one to probably keep a bit of an eye on. Interestingly, just in terms of market moves, crude was very choppy yesterday, but ultimately ended the day broadly unchanged, around $68.25 a barrel. But we did see the dollar continuing to soften. The dollar index down about 0.75% yesterday, down another third of 1% this morning, and actually, as I speak, testing the 105 figure to the downside. In turn, that has taken cable north of 128 for the first time since last November. We also see the euro testing 107 to the upside as this broad-based dollar weakness continues, and euro dollar is not particularly far off its pre-US election levels at the moment. One of the factors that has pushed the euro considerably to the upside this morning is the pretty chunky sell-off that we have seen in European government debt. The 10-year Bund yield, when I left the desk, was trading about 22 basis points higher. That is the biggest intraday jump in the 10-year Bund in a couple of years. We were trading about 2.7% earlier on, and this comes after news late yesterday from incoming German Chancellor Friedrich Merz. He confirmed that Germany will be looking to reform the debt brake to allow for greater defence spending, and he also was talking about how this special defence fund that they want to set up is going to be a total of 500 billion euros. I think previous Bloomberg reporting had put that at about 200 billion. So we're talking about 2.5 times bigger than the market had previously been expecting, which is why we've seen not only such significant softness in bunds at the open, but also why we've seen softness across the board with treasuries softening into the close yesterday. The 10-year rising back towards 4.2%, having fallen intraday to a low of 4.1% on those market jitters and that
Also,
haven demand.
it's probably worth noting that Germany, just as we've been on air, have just started to sell their new 30-year bond as well. So even more bonds come into market.
Oh, fucking hell. I thought for a minute you were going to say that they've completely denied that story or something. But yeah, well, it will be interesting to see how that supply is absorbed, given, how
Yes.
soft the market is looking this morning. A couple of other things from me. Unemployment in the Eurozone, that dipped to 6.2% in January, down from the 6.3% we saw in December. Better than expected Eurozone data there, which is always a little bit surprising in and of itself. One for the tech folk out there, Apple. They introduced a new iPad yesterday, the iPad Air. Apparently it has an M3 chip, a powerful M3 chip, and a new Magic keyboard. If that means anything to you, then good luck. And lastly, actually, sorry, just to pivot back to trade finally, China, again, this is one I don't particularly understand, but China, apparently their Ministry of Commerce are probing US single mode optical fiber products. Now,
Oh, right. Yeah.
I've got no idea what they are, I'll be completely honest, but I think that is an important headline because one of the kind of themes of China's retaliation to the US tariffs is they haven't just gone, oh, okay, the US will put 20% on us, we'll put 20% on you. It seems like they're trying to be a little bit more targeted. And I think their sort of modus operandi is let's make life as difficult as we can for some of the biggest US companies operating in the country, because we obviously had these antitrust investigations into, I think Alphabet and Nvidia were being investigated for various bits and bobs. So I think China's strategy is, yeah, we'll play around with the tariffs, but we're also just going to make it bloody awkward for your companies to be
Yeah.
here,
I
rather
think
than just slapping levies on all over the place.
Yeah, I think you've absolutely nailed that. Also, it's like, how can we influence the most? Sorry, how can we leverage the most influence on Trump? And it's really feels like it's targeting kind of companies that Trump will be seen to want to succeed.
Mm.
Yeah, so really kind of leverage that, and kind of, like you said, I think that kind of makes sense if you are going toe to toe. It's kind of, pick your battles rather than just this scattergun approach.
Yeah, no, absolutely, and I think that is just potentially the latest step in that sort of plan that they seem to be following. Anyway, that is all from me for the moment.
Worth pointing out on all of this, really, our dear friend Polemic Payne did a very good tweet recently, and he kind of re-upped it yesterday. Kind of the trade of the year will be long volatility during Trump's waking hours. So
Oh
if
yeah,
CME, if my friends at CME are listening, if you can make a product for that, please, please, please.
I
It will
was
be bid all the time.
I
Still.
was going to say, yeah. Can someone much smarter than us please go and structure that and then make it nice and easy to trade? Thanks.
Yeah, please. Available on Pepperstone.
Naturally.
Right. Thanks for that, Mr. Michael Brown. Big shout out, as usual, to Cam and Zach for helping the PIQ Massive put structure together and get stuff on content all together. Zach, I'm sure, is due for another holiday anytime now. So anyway, some headlines from our overnight news roundup, which is available on Substack. The pinned tweet will be going up shortly. Macroeconomic news. Trump signals commitment to tariffs in a record-breaking address to Congress. President Trump reaffirmed his administration's policies, including tariffs despite potential market disruptions. Over in China, China's economic plans. Beijing set a 5% GDP growth target for 2025, increased its fiscal deficit target to 4%, and pledged AI and tech investment, but offered limited household support.
Do you know what?
Treasury.
I'm gonna really, go out on a limb and stick my neck on the
Yeah, all
line
right.
here.
I know where you're going.
I
They'll hit it.
think they might just about hit it.
Well, yeah, it's very easy to hit your targets when you're writing them in pencil and self-marking.
Yeah, yeah. Mark your own homework. It's quite simple.
It's very easy. Treasury options. Traders are bullish. Traders anticipate a bigger bond rally amid shifting market sentiment, according to the options markets. We've already covered the German falling. Debt markets react to new fiscal plans, sending bond yields sharply lower on top of the extra supply that we've seen come today in the 30-year form. BOJ signals caution on rate hikes. Governor Ueda warned of geopolitical risks impacting capital flows, while Governor Achida provided no timeline for rate increases. They must be starting to really panic that they've gone far too late on rate hikes. Geopolitics. Trump, as Michael discussed the Ukraine peace talks. U.S. President said praised Zelensky's willingness to engage in negotiations and secure a minerals deal. China's going to increase their defense spending. Military expenditures will rise 7.2% as President Xi aims to challenge US influence. And in that region, sticking in that region, Taiwan prepares for conflict is the headline. Officials study Ukraine wartime's resilience amid increased Chinese threats. And now just some equities and corporate news. Disney to cut jobs. The company will reduce 6% of ABC News and Entertainment Network staff due to declining TV audiences. Tesla is going to start offering incentives in China. A 8,000 yuan, which is approximately $1,100, insurance subsidy is available for Model 3 purchases until March the 17th. ASML, the picks and shovels element of the chips industry, faces uncertainty in China. Export controls and regulatory risks weigh on demand for future orders. And finally, Adidas growth continues. The brand posted a strong Q4 sales despite Nike's ongoing struggles. And finally, ByteDance employee buyback. The company is repurchasing shares at a 312 billion valuation. That's with a B, a notable increase from previous rounds. Up it goes. And short and sweet from me, like myself. Back to you in the studio.
Well, definitely one of those adjectives. I'm not sure about the other. Thank you, Ryan. In terms of today, then, of course, it's going to be another day of headline watching, particularly in terms of trade after Lutnick threw out the prospects that those Mexico and Canada's tariffs may be rolled back at some point during the session ahead. So I think that will naturally be the market's main preoccupation as we move through the next 24 hours or so. In terms of scheduled events, though, we do have a relatively busy day up ahead. We have some final services PMI figures due this morning from the Eurozone in 13 minutes' time, and then from the UK at 9:30. Both of those metrics expected unrevised at 50.7 and 51.1 respectively. At 10 o'clock this morning, we have the latest PPI figures out of the Eurozone. Producer prices seen having risen 1.3% on the year in January, up from the unchanged reading that we saw in December. Again, this data a little bit stale, and it probably won't materially influence the ECB, who will be delivering a 25 basis point rate cut at their meeting tomorrow lunchtime. Into the afternoon and into the US session, I need to forewarn you that this is not a cry for help, but I think today's ADP employment figure at 1:15 might actually be worth watching for once. Now, let me clarify.
Hang on. Hold the front door.
Well, what? I know. I did think that might cause a little bit of uproar. Let me be very...
No, sorry. Are you going to go on from here and say that you actually value the Dow's makeup?
No, don't worry. I haven't been drinking just yet. Let me make it very clear. The ADP print is utterly useless for forecasting the non-farm payrolls number and really for telling us anything about the state of the US labour market. The problem is the market is so jittery and nervous about the state of the US economy at the moment, and signs that momentum is stalling very, very rapidly indeed, that any soft data point, no matter how accurate or important or how inaccurate or perceived unimportant it is likely to attract increased attention among market participants, particularly if we do get a soft number, because that's just going to add even more fuel to the fire in terms of these growth scare worries and, you know, these folk who are chatting about recession and all the rest of it. So my view on ADP has not changed. It's not worth the paper that it's written on, but in terms of market impact, it might actually have one today, just given where sentiment and where positioning is at the moment. The number is expected to come in at 140,000. And that would be down from the 183,000 that we saw in the month of January. And of course, that data comes ahead of the official payrolls numbers, which are due on Friday lunchtime, about half an hour before we go to the pub. Other bits and bobs, other bits and bobs of US data today at 3. We have the latest factory orders figures. Orders expected to have risen by 1.7% in January, up from the 0.9% decline that we saw at the back end of last year. And we also have the ISM services PMI print out of the States at 3. That figure expected at 52.5, down from a prior 52.8. Of course, the ISM manufacturing gauge earlier in the week was pretty grim. Prices paid through the roof, new orders through the floor. The headline was only propped up by everyone rushing imports to try and front run tariffs. So do bear in mind that if we get a soft services number, then, well, without putting too fine a point in it, the market's going to fall out of bed again. Other bits and bobs today, there are no notable corporate earnings either before the market open or after the market close. But on the monetary policy front, we are due to hear from the Bank of England Governor Andrew Bailey, Chief Economist Hugh Pill, external MPC members Green and Taylor. They will be testifying in front of the Treasury Select Committee at around about 2:30 this afternoon, London time. And then at 7 o'clock this evening, we will have the release of the Fed's beige book of anecdotal economic evidence, which, again, is not usually a huge market mover, but given how worried market participants are over the growth side of things at the moment, it could take on a little bit more attention and cause a little bit more of a reaction than usual. And that is your lot from me today.
Awesome. Thank you very much, Mr. Michael Brown. As always, you're outstanding on the Morning Blast.
Thank you very much.
Listeners, thank you so much for tuning in. As usual, especially our regular listeners, another re-up Friday's beers. If anyone is in town in London or in the UK and willing to travel, which surprisingly a few people come down to the Token House from about 4:30, 5:30. To be fair, I'll be there from about 1 o'clock. But I think it's going to be a good mix of people. There's from the feedback I'm getting, it's going to be some old trading bods from back, even some back from back in the floor day, some of my mates, some brokers, some people from actual retail trading companies such as eToro and Pepperstone, obviously.
And we can reorder that list.
Yeah, sorry. As I said, I was like, I'm seeing you in the on the Morning Blast. Also, I think some bods from the CME are coming down. So yeah, come down. It'd be good. But again, me and Michael cannot stress this enough. This isn't a Ryan and Michael Brown buy pints. We're just going to be in the pub, and if you want to come to the same pub, you're more than welcome to.
Yeah, that is very, very important.
In fact, I might make a flyer with that very, very clear.
Oh dear.
Right. Mr. Michael Brown, thank you as always. Listeners, thank you as always. And we'll see you tomorrow. Bye-bye.